Traders in the cash flow quadrant. What is the cash flow quadrant? Well, let's talk about this. The cash flow quadrant was created by Robert Kiyosaki in the context of Rich Dad, Poor Dad, and specifically Robert wrote a book called The Cash Flow Quadrant. And this is the cash flow quadrant right here. We have E, S, B, and I. And this line between the left side and the right side quadrants represents a big shift in psychology. So most of the world sits on the left side of this quadrant in the E and S quadrants. So let's talk about quadrant one, the E quadrant. E stands for employee. And in the E quadrant, people who are employees are motivated by fear and security. They're scared that they're not going to have any money, and what they really want is the safety of a paycheck. And this is most people. Now, employees work for the system. And as such, they are in the most disadvantaged position. They're in the most disadvantaged quadrant. So when you're an employee, you pay the government first. So when you get paid, the government gets their share, and then you get what's left. And not only that, you don't really get to deduct any expenses. You get to deduct your mortgage interest if you own a home. In some cases, maybe some of your medical expenses, but in general, you don't get to deduct anything. And people in this quadrant, they want to have a safe, secure job. In everything that we're taught when we grow up, be a good kid, follow the rules, get good grades, go to a great school. And if you do all of these things right, then you'll get hired for a great, safe, secure job. And it's an illusion. It's really a lie. But this is where most people are. Now, we go to the second quadrant, and the second quadrant is the self-employed quadrant. S stands for self-employed. So in the S quadrant, people in the S quadrant are motivated by freedom. They don't want a boss. They don't want anybody telling them what to do. People in the S quadrant tend to be perfectionists. They think they do it better than anybody else. And they tend to be distrustful of others. They think they do it better, so why would they hand it off to anybody else? They think everybody else is less than them. This person is the system. So an employee is in the system. In the S quadrant, the self-employed is the system. In other words, they do everything. Everything revolves around them. If they stop, the revenue stops. The business is reliant completely on them. Now, ironically, in the E quadrant, the employee works for a boss or works for the company. In the S quadrant, they want freedom. They don't want a boss. But what's interesting is a lot of people that leave being an employee and move to being self-employed, they become disillusioned. They become disillusioned. And the reason they become disillusioned is they realize that they swapped one boss for another. As an E, the company or your boss is your boss. They're in charge of you. When you move from the E quadrant to the S quadrant, you now find that your boss is your clients. You spend your whole life trying to make sure your clients are happy. And because you're doing everything, you can never take a break. A lot of people in the S quadrant burn out. A lot of them just give up. They just can't take it anymore. So the majority of the world falls in the E and S quadrants. Now we move to the right side. Quadrant 3 and 4. When we move from the left side to the right side, there's a quote here I want you to remember. And that is that the poor and middle class work hard for money, and money works hard for the rich. So on the left side, people are working hard for money. On the right side, money is working hard for them. So quadrant 3 is the B. the business owner. So when you're a B, your business is built on systems, processes, and great people. One of the ways you can tell that you own a business rather than own a job, self-employed people own a job, business owners own a business. One of the ways that you can tell this is that owners can leave in the business and they can come back and the business will continue to make money. It might even be doing better with the owner gone. So then other characteristics of the business owner is it's one of the best ways to create infinite wealth because cash flow is high. Businesses kick out cash flow. To become infinitely wealthy, to become truly wealthy, we need cash flow. So businesses are a great way to make this happen. The other thing with businesses is you get major tax advantages. So you get depreciation. This means that you get to deduct your expenses first, then pay your taxes. For the employee paid the taxes and got what's left. With businesses, you deduct your expenses first, and then you pay taxes. The second aspect is when you own a business or you own stock, it's not taxed until it's sold. And then when it is sold, it's likely sold and taxed at the capital gains rate, which is the lowest tax rate. So you either have no taxes or the lowest tax rate. Then we move to the final quadrant, quadrant 4, which is the I quadrant. I stands for investor. The investor focuses on rates of return versus risk taken. It's quite simply, is it a good investment for the risk we're assuming? The I quadrant provides the capital that feeds the other 3 quadrants. And the I quadrant is tax advantaged through, if you look at wealthy people in the United States, the wealthiest people in the United States become wealthy one of 2 ways. One is through real estate and what's called a 1031 exchange. So real estate can be depreciated, and then when the depreciation runs out, you can exchange it. What that means is you can sell the property, and typically when you sell it, you have to pay taxes, but not with real estate. You can do a 1031 exchange where you take the profits and you use it to buy another building. And as long as you buy another building or buildings equivalent to your sale price, you don't pay taxes. So you keep rolling your profits tax-free. Huge tax advantage. That combined with depreciation is a huge advantage. The second way that investors benefit is through long-term capital gains. Again, they have long-term holds in businesses where they pay no taxes until they sell. And when they do sell, they typically are paying the capital gains rate, which again is the lowest tax rate. So people on the left side pay the highest tax rate. People on the right side pay the lowest or no taxes. People on the left side they get taxed first and have to live on the rest. Expenses are limited deduction. On the right side, you pay your expenses first, where virtually everything can be written off. Then you pay your taxes. Now, let's relate this to traders, because people don't think about trading really as a profession, and it is. And how does it relate to the quadrant? This should stimulate some thought for you. So quadrant 1 is the employee quadrant. Well, there are employee traders. People don't really think about this, but it's true. Traders at banks, at pension funds, at hedge funds, at some proprietary trading firms, at mutual funds, they get paid salary, W-2 salary, and bonus. And then there's other people who are what they call execution traders. And execution traders are people who don't necessarily trade. They don't trade for profit. They trade to execute a strategy on behalf of the company they work for. So you have execution traders at financial institutions like insurance companies. We mentioned pension funds and mutual funds. But you also have them at corporations. Corporations that are like energy companies, agricultural companies, food producers, a lot of different commodity businesses, they have execution traders who help execute what needs to be done. And again, people in quadrant 1 get salary plus bonuses. Then we go to quadrant 2, which is the self-employed trader. Now, this is the majority of traders, especially those that want to be traders. They typically become self-employed. They trade for their own account, or they're proprietary firm traders. We had proprietary firm traders in group 1, and there are prop traders in group 1, in quadrant 1, where they get salary bonus. But there's also prop traders in quadrant 2 that get profit shares. And those have some tax advantages. They don't really get a salary. They might get a draw, but they get really advantageous splits. So the big thing, though, that's important to note is a lot of people who want to get into trading make the classic shift that, like people do from E to S. They don't like their job. They don't like their business. So they want to come to trading to meet some need. And one of the biggest needs I see is freedom. Freedom from a boss, freedom from clients. But when you move into the S, you just traded one job for another. You now have a job as a full-time trader. And just like in the self-employed quadrant, when you're a self-employed trader, you make money if you trade, and you don't make any money if you don't. So the whole thing is relying on you again. So a lot of people that come into this, they become disillusioned because they can't believe how many hours they have to spend and how hard it is to make money. So now we jump over to quadrant 3, to the business owner trader. And same thing, you can own a trading business where you have traders that work for you, you have systems that work for you, you have processes that run the whole thing. And you, as the owner, can support other traders who create cash flow for you, the owner. So proprietary trading firms are classic examples of this. One of the disadvantages of business owners is they typically underwrite the mediocre traders and lose the great traders. So what happens is you have a trader, you back them, they lose money, you sit with the loss, they make money, sure you make some money, but when they get really good, they want to go totally on their own. So you can kind of have this continual process that your best people want to leave, and you eat all the losses of the bad ones. So that's a challenge. The fourth quadrant is the investor. So this is when somebody invests in other traders, other firms like hedge funds or prop trading firms or mutual funds, or they invest in funds themselves like hedge funds. Their big work is done through both the due diligence to find the investment and then the ongoing risk management to make sure that their money's safe. But if they do this, this provides excellent returns that act like cash flow. Once they get this right, it doesn't take very much time, and they can make a lot of money without doing much. This can be the path to incredible wealth with little work, but you got to have the money up front. So, in my career, what's interesting is I've been primarily in quadrants 2 and 3. Never really was in 1. I was before I started trading, but once I started trading, I really moved into 2. And I've been a 4. But when you look through my career, where I've made the most money in my career, by far, is being a 3, being a business owner. Training traders, putting them into my business and my system, made me a lot of money. And I can remember certain things. I can remember making $400,000 on a Thanksgiving night when I had a trader make $1.2 million in a euro on a Thanksgiving night when the markets were dead in the United States. I was on vacation with my family. Life was amazing. I was down in Miami in my condo, and I made $400,000 on Thanksgiving night doing nothing. That's the advantage of being a business owner. I had a day that I made $1 million in a single day as a business owner. I wasn't even at work that day. Okay, so that is the power of being a business owner. And then one of the interesting things is I made a switch that I was not even really cognizant that I made, which is that I sold out my interest in my prop trading firm to go start a fund. And what I was actually not even aware of is I went from being a B, quadrant 3B, to a quadrant 2S. I had this vision of what I wanted to do, being a macro fund manager. I wanted to build out these systems, but I was at the hub of it. And then what was happening is if I traded really well, we made money. If I didn't trade well, or if I was working on research or other projects, we didn't make any money because I basically swapped a business for a job. That was a big epiphany for me. So when I think through this, currently I am a 3 and I am a 4. A 3 and a 4 and a little bit of a 2. I have all 3 going, but I'm focused on being a 3 and a 4. That's where my focus is now. So what quadrants are you in? Have you even thought about this? Did you even know about the quadrants? And now that you know about them, what quadrant do you fall into? Be honest. And where do you want to go? A lot of people love the idea of being a 3. Like, I want to build trading systems and I could just go to the golf course. Building trading systems are hard. They're hard. They take a lot of work. You have to really know what you're doing. And there's a whole gambit of what is a trading system. So I want to caution you on this. It's easier said than done. But if you do get it right, and intention is everything. If you want to be a 3, you can be a 3. You can build it that way from the beginning. You can work towards that in your processes and your goals and your reviews. But what quadrant do you want to be and why? As I said, most traders want to be 2s. It's actually not a great way to go. So how can you not be a 2 and instead be a 3 or a 4? That's a much better life. So think about the answers to those questions and continue to tune in for Trader Tip Tuesday every Tuesday. And be on the lookout. We have some really good content coming out. There will be a PDF that will be launching soon that is the 10 irrefutable truths of trading. You'll see me talk about it occasionally in a webinar. But the 10 irrefutable truths of trading success, the 10 irrefutable laws of trading success. You definitely want to check this out. It's something that I spent freaking millions of dollars, thousands of hours to learn the lessons that make up these 10 irrefutable laws of success. So check those out. Have a great week. God bless, and I will see you next week. Bye.